My cousin lost 4.5 lakhs because of this mistake, and I don't want this to happen to you. Being an NRI in Dubai, deposited his salary into the wrong account. The bank froze it and he ended up paying penalties plus months of paperwork. This could happen to you if you don't know these 2025 rules. So I'm going to show you exactly which account protects your money, the new RBI updates that changed everything, and one mistake that's costing NRI lakhs. But first, you need to understand that there are three types of accounts and each one solves one specific problem. Mix them up and you'll face frozen account and penalties. Get it right and you'll save lakhs in legally. First is the NRE account, which is your tax-free pipeline from abroad to India. You get zero tax on interest. It's completely tax-free in India. You get unlimited repatriation, which means you can send all your money back anytime with no cap. And it's perfect for your USD, GBP or UR salaries coming into India. But here's the critical trap. If you put even 1 rupee of Indian income here, your account gets frozen and you face instant penalties. Let me give you a real scenario so you understand this better. Say you are in London earning £4,000 per month and you are sending money to your parents. NRE account is useful here. NRE means you get tax-free interest and you can transfer everything back when you return to UK with no questions asked and no limits. Plus, the latest update is that RBI has simplified cross-border rupee transactions, making NRE transfer even smoother than before. Now let's talk about the NRO account, which is where your Indian life happens. Your rental income, dividend goes here. Your old EPF withdrawal can only go into NRO. Here's what most NRI don't know. Without an NRO account, your Indian income is stuck in limbo. So this isn't optional, it's actually mandatory. For any Indian earning, let me tell you the current repatriation rules so you don't get confused. For current income like rent, dividend and pension, you get unlimited repatriation. But for capital appreciation like property, sale or FD maturity, there's limit of USD 1 million per year after tax. And here's something really important. You must use only one bank per financial year for repatriation because RBI tracks this very carefully. Pro move here, you need to file Form 15CA and 15CB before any repatriation over 5 lakhs. There's also a joint account power that only NRO gives you. It's the only account that lets your resident parent be joint holder, which is a huge advantage. Next up is FCNR deposit, which is your hedge against rupee crashes. Let me give you a real example from November 2025 when the rupee hit 89 per dollar. If you had your NRE account in rupees, you lost huge value in just few months. But if you had your FCNR in dollars, you still had the exact same dollars with no loss. The current rates show that FCNR interest actually beats most US UK savings accounts and it's tax free in India. So when should you use them? When you have $30,000 or more that you won't need for 1 to 5 years, when you are worried the rupee will weaken further, or when you want predictable returns without any currency risk. You can choose from multiple foreign currencies available. Here's bonus tip. When you are returning to India, you can convert your FCNR to an RFC account which keeps the foreign currency benefits even after you come back. Now let me give you your action plan. If you have any Indian income at all, open an NRO immediately because this is non-negotiable. If you are sending money from abroad regularly, open an NRE for tax-free benefits plus unlimited repatriation. If you are sitting on 40k or more in foreign currency, lock it into FCNR if you won't need it for 1 or more years. Here's the critical rule. Most NRIs actually need both NRE and NRO because one account legally cannot handle both foreign and Indian income. There's also a new PINS simplification where you now need only a NRE PINS account for stock investment, not a separate NRO PINS, which means less paperwork. Here's the critical December deadline you cannot miss. Convert your resident account to NRO within 30 days of becoming an NRI because banks are getting stricter on this. Why does this matter so much? Because non-compliance means a frozen account exactly when you need to send money home for an emergency. So don't risk it. There's also a re-KYC alert. If your NRI account is over 3 years old, banks now require revalidation. So check your email because missing this can freeze your account in just 72 hours. Let me give you an insider tip that could save you money. If you are repatriating under 5 lakhs from NRO, you don't need Form 15CB. You just need 15CA. But if it's above 5 lakhs, you must get a CA certificate with no exceptions. Here's a DTAA benefit many people miss. If you are in US, UAE, UK or Singapore, check your tax treaty because you might qualify for 10 to 15% TDS instead of 30%. And this one tip alone can save you lakhs. Alright, now I want you to comment your situation. Type 1 if you need to convert your account now. Type 2 if you are confused about repatriation rules. Or type 3 if you want an FCNR versus NRE FD comparison. Drop your country plus one question in the comment and I'll personally reply with the latest rules. Share this with one NRI friend before they make an expensive mistake. Thank you.